Hey friend, it is Brandon Gustafson with Assisted Living Investing. I help beginners like you launch their assisted living business in the next 12 months. Excited to have you here with me on the channel. Today, we're going to be talking about tax strategies for assisted living, your assisted living business. What does that look like? How does it work? Some of the things that I've learned having run these businesses myself for over 4 years now. And just wanted to share a little bit about that as we get into this. Now, before we get started, I want to remind you to go and grab the free business plan checklist. I've got a link for it here on the thing. I don't know where it's down here when as you're looking at me on the video. It's just kind of in different places than it used to be. I'm trying to upgrade a little bit of the production value here of what we do. So make sure you go and grab that free business plan checklist, assistedlivinginvesting.net/BP checklist, and that will help you out in moving things along and getting your helping you launch your assisted living business. That's what I'm here to do. For those of you that are new here, would love for you to just type in newbie down below. I love seeing the new people that are here and making sure I'm helping you. We're going to have time for Q&A here at the end, so make sure you are typing in your questions as we go, and I will get to those here at the end of the video as well. And apart from that, I've about got everything done here to share this out. Some of this stuff that has to be manual. So there we go. Got that one up. And we should be good. So let's jump into it. Again, today we're talking about tax strategies for assisted living, for your assisted living business, so you can understand exactly what that's going to look like, how that's going to work for you. My name is Brandon Gustafson. For those of you who don't know me, I own and operate 2 assisted living facilities. I've been doing this since 2020. I've secured over $1.5 million in SBA funding. I operate out of state. I live in Utah. I operate in Colorado and in Idaho. So I've been doing that since 2020 as well. I also have a master's in healthcare administration. I've worked in the healthcare industry for over a decade, have a lot of experience just in the healthcare industry in general, making sure, I love being in this industry and the impact that we could have on people. It's something I'm super passionate about. And when I found out about assisted living and my interest in real estate, this was a really great blend for me to get in here and have the impact that I love having on people's lives through the healthcare industry, and then being able to do well by investing in real estate. So excited to have you here with me. Now, as we get into this, want to just give you a quick disclaimer. I am not an attorney, so the information that I give you here today should not be taken as legal or professional advice. This is general information. I highly encourage you to talk to a tax professional to understand the impact on your taxes, to talk to an attorney to understand the different entities that you should be setting up, how that's going to impact you, its protection, everything there. Please go talk to a professional. I'm going to share some of my experiences. I'm going to share a little bit of the strategy around why I did the things that I did, to kind of give you some insight from somebody that's actually doing this, why I did it the way that I did it. But for your situation, it may be very different from mine. So I encourage you to go and talk to somebody about that. With that disclaimer out there, let's talk a little bit about entity structure. So something that I found to work really well for us was separating the real estate entity from the business entity. So basically, when we do this, we have a real estate holding company. We go and buy the house. Let's say it's just $1 million home, and we go and we close on the property. Now, the way that we would do this is we would actually, that entity that's going to own the property, that entity is the entity that is going to do the closing. It's going to be in that entity's name. Now, you might come across lenders that they want it in a personal name. There may be situations. So take that for what it's worth. But if you put the name of the acquiring entity, the acquiring individual entity, whatever you want to call it, is that business, it's going to hold the real estate. It keeps it siloed, keeps it there, keeps it clean, from an accounting perspective, from a legal perspective. So you have that entity that owns the business or owns the real estate. Then you have an operating entity, the entity that is actually going to run the business for you. So for us, our facility is called Be Well Assisted Living. So we have Be Well Assisted Living that comes in here, and they own the business. Now we create a lease agreement, and I actually have a template of this. So if you're like landlord, you're trying to figure out some of this, go check out that free resource. It's at assistedlivinginvesting.net/ lease dash agreement. So it's a little bit of a long tool, and YouTube, we're going to have links down below for it. So make sure you go and check out those links. So if you're watching on Facebook or somewhere else, make sure you go to YouTube and grab the links after the fact, and you'll be able to get that free lease agreement. But it's a really great tool to help you see exactly what that relationship might look like. So us as an operating entity, we are going to lease the building from our real estate entity. We just set up an agreement. Typically for us, it is just basically what that debt service payment, what that mortgage payment is. We're going to do that. We review it on an annual basis. We make sure everything's up to date. Payments, because SBA loans are often adjustable rates, so our payment will adjust a little bit. So we have to adjust the paperwork to reflect that. Super important for you to do something like this from a legal perspective. What it does is you have your operating entity, let's say Resident Falls, or something happens with a resident, and they want to come after you from a legal perspective. They're coming after the operational entity. Now, that operational entity doesn't have a lot of assets. It doesn't own the property. It doesn't. The margins here in these businesses are slim enough that there's like not much cash in them either. And so when an entity or an individual who has fallen, they get with an attorney who's going to sue you. They look and see what is available to try to get. They're going to see this, maybe it's not worth it for us to do this. So that's just kind of a quick example of what that might look like. Something for you to kind of keep in mind. And by having your real estate and your entity in different silos, it can protect them. So we have a pretty complex, I would say, legal structure, complex enough that every time we have to go close or do taxes or anything like that, I have to have pretty in-depth conversations with lenders or other people about the structure of our entities. But it's good, that complexity and maintaining those entities does give us a little bit of extra liability protection, and protects our personal assets, the assets of the business, and everything else that goes into it. So something for you to keep in mind. It can complicate things when it comes to taxes. We'll get into taxes here in just a minute and the impact on that. There's actually some benefits to it. It's a little more complex, but there are some actual benefits that you can find from that. So speaking of tax benefits, you've got your depreciation deductions for the property. So you have the property there. You can do the deductions on that. I believe I got the schedules here in a slide or two, but depending on if it's residential versus commercial, it's 39 years or 27 and a half years. Just kind of depends on the situation there. There's other strategies. We'll talk about those here in just a few minutes. But that rental income that comes into the business can be shifted around as profit as well. So you've got money coming into the business. That business then has to pay the real estate entity, but the profits there can come from the operational entity rather than from the real estate side. You can shift those around. It gives you a little bit more flexibility to play with as you're looking at those. These are conversations, strategies to have with the tax professional to do. I don't claim to know or understand all of them, and they shift from time to time as new rules come on. And then I mentioned liability protection really can help you out a lot there between the two different assets, the business and the real estate. So really helpful for that. Let's get into depreciation strategies. So depreciation is, let's say you've got $1 million home, and well, let's see. Yeah, I'm going to try to keep math as simple as I can. Let's just say that the value, let's say there's $1 million that's available that needs to be depreciated. Okay. So if it's a residential home, you're going to take that $1 million valuation, you're going to divide it by 27 and a half. And I'm not going to try to, let's do this. Okay. This will be easy. Let's say you have $27,500 in just assets that are available. You're going to depreciate that by 27 and a half years. That means you're going to depreciate $1,000 per year with something that values at $27,500 and $27,500. Now, if it's a commercial thing and you have the assets there that are $39,000 over a 39 period, that's $1,000 per year. So that's a very super basic way so you can see how the math works. But you're going to take whatever that value is, divide it by the 27 and a half for residential property, 39 for a commercial, and that's going to give you how much you can depreciate, which means you're putting that number on your taxes to say, hey, I had an asset and it's depreciated by X amount over that period of time. You put it in there as a deduction on your taxes. Okay. There's also the chance to do bonus depreciation. There's also, yeah, so bonus depreciation. These could be deducting larger portions of FF&E furniture, fixture, and equipment, or other leasehold improvements. So for us, our our facility in Colorado, we had $1 million grant. We made a bunch of improvements to that. Now, the money that we received for the grant was free. It was, here's $1 million. Go do this stuff. Make sure you follow the rules of the grant. Make sure you're documenting everything, get the receipts and all of the things that go into that. But as a for-profit organization getting a grant, that is now taxable income is what it counts as. Now, some of that is income that comes in and it's going out for services, so that's different. But if we are doing a leasehold improvement, let's say we're upgrading our HVAC, there's a certain depreciation schedule that happens for HVAC systems. And so you have to understand exactly what that's going to look like and the impact of that. And could you do a bonus depreciation on that? These are all strategies we're having conversations with our accountant about right now. So anything that you are doing that's bigger purchases, you're buying all new furniture for the facility, you're upgrading the HVAC system, you're doing your sprinkler system. All of those things are going to be deductions when it comes to comes to the taxes, it comes to tax time, but they're going to have different depreciation schedules. And so you need to understand what that's going to look like. But there are some really good strategies there to either do a bonus depreciation and take all of it in year one versus, hey, you know what, we've spent $80,000 on our sprinkler system, and that is something that we can actually depreciate over a 5-year period. So I chose a bad number, 80. Let's just say it's 100,000 for easy math, $100,000 in a sprinkler system, and you're going to be able to depreciate it over 5 years. That's 5 divided by 100, so it's a $20,000 deduction in each year for the next 5 years. So there are strategies and things around that. Again, not a tax professional. I'm giving you round numbers to make math work and hopefully illustrate how some of this is going to impact you from a tax perspective. There's also cost segregation. This is basically going to say, certain updates can be made to be able to have a shorter depreciation schedule. So we talked about the 27 and a half or the 39 year. There are ways to do a cost segregation and to accelerate that a little bit over a shorter period of time so you can get larger deductions. This is really helpful for somebody that isn't necessarily going to do a buy and hold on a property. So if you have the intent to sell it in 3 to 5 years, a cost segregation might be something that you would want to look at. These are conversations for a tax professional, something for each individual, your situation. You got to determine, is it going to fit for me or not? Is it going to work for me or not? And then you can move forward from there. But these are all depreciation strategies, and those deductions can really help you out to offset some of the income that's coming in from the business, and can really benefit you from that standpoint. Let's talk a little bit about some of the tax deductions that come. So we talked a little bit about depreciation, but there's also other tax deductions that you can do now that you're a small business owner. So you've done your assisted living facilities, and this doesn't necessarily need to be the facility per se. These could be things that you're doing individually, and deductions that you're going to qualify for and be able to use. Home office is a great one. Me owning businesses and operating remotely, my home office is a deduction because I do a ton of work. I mean, I turn the camera around, but I have 5 screens over there, so for doing different types of work, and I just have a very clean setup that works really well for the way that I like to do things. But my home office, my YouTube studio, everything that I do here is kind of dedicated for that. It's a dedicated space, and so it would qualify for a home office deduction. Talk to your accountant about that. Staffing costs and payroll tax credits. You have to pay people, and so those are going to be, there's going to be deductions in that as you're paying your staff for the services that they are rendering to people. So you have to make sure you have a really good software. I use Gusto. We're gonna have a link down below for that in YouTube, and make sure you go and use something like Gusto to help you out. We actually have videos on Gusto on the channel, to really help you understand how to use payroll. Super useful, and having a good solid payroll system is going to help you track those numbers so you can get the deductions that you need at the end of the year. Medical equipment and supplies, anything you've got to buy there. From that standpoint, we buy medical supplies for our residents on a consistent basis to make sure they have the things that they need, that we're fully stocked with anything that a resident might need. Meals and entertainment. So if you are, as a business owner, we go up and do a trip up to Idaho or to Colorado for our facilities. The lodging and the meals and everything that kind of encompasses that trip, it's a business trip. So those are deductions. Marketing and advertising efforts that you're putting into to bring people into the facility. Professional services, working with a consultant, working me you working with me, business deduction, right? So there's that. There is there's tax professional, there's attorneys. Any of the fees that you're paying there, those are deductions, because you need that professional guidance from people. Vehicle donations as well. So if you had an old van that you had been using for transportation, you don't need it anymore, you donate it. Those types of things. There are so many different deductions out there. What I just touched on here is not even scratching the surface. So there's just a lot out there to help you make some progress as you are looking to move forward. And uh, one of the really big reasons to get into real estate, to get into small business, is the types and amount of deductions that are available to you, to offset a lot of what you're doing. Some people don't like it. Some people don't. They think it's bad that people are doing this, but these are the games that are out there. You look at politics, and I don't want to get political, but you look at one side and they say, oh, these tax benefits are for billionaires, when in reality they're billionaires that have benefited from these other tax breaks for decades. Anyways, they just want to say it so they can get in with the people, and it goes both ways. And so that's something that you just have to be aware of, that everybody know, the people that are in the know, the people that are in politics, the people that are investing, doesn't matter where they're at from a political standpoint, they are benefiting, they understand the rules of the game, and they are playing it. And so that's why you need to also understand these rules so that you can play the game with them. And that's why I cannot stress enough that you hire a good accountant that understands what you're working through, and help you kind of make some progress and do some tax planning and know how to take advantage of some of these strategies to benefit you from a tax standpoint. Like it will the amount of money that you pay for a good accountant, you will make that up through the way that you are running your business. So that is what should happen. Just like me coaching you, you should get 10x the value of what you pay for me to coach you, whether it's the Launchpad, the Accelerator, or the Mastermind program. You pay me, I'm going to help you reach your goals, and 10x off of everything that you're investing in me. That's my goal, if not more. So that's what my hope is for you. That's what I'm here to help you do. Okay. Let's talk about retirement and some tax advantage investment strategies as well. So these are ways that you can put money into tax sheltered locations. Put your funds into a tax sheltered location so that it doesn't have to get taxed again. It doesn't have to be taxed multiple times. It can really benefit you out quite a bit. Work with a retirement advisor, work with your accountant, understand what these are, how they impact your taxes. So make sure you do that. But some that you should be aware of are a solo 401k or an SEP IRA. They're going to help shelter more income from the taxes while you're saving for retirement. You can put that money in, you can pay taxes on it up front, you put it in there, you don't have to pay taxes when you pull it out at the end of things. You can use it to invest. There's a lot of incredible strategies out there around using IRAs and 401ks to do investment strategies. Not something I'm going to get into in this video, but there's a lot of options out there that can really allow you to do that and keep that money in a spot where you don't have to pay the taxes on it, which is nice. HSA, so health savings account, is another great way. So this is pre-tax dollars. You, let's say, if you work and you have a high deductible insurance plan, your place of work may have an HSA, a health savings account option. When you do that, what that's going to do is you're going to take that money, you're going to pay taxes on it, and then you're going to put it in into your HSA account. So let's say it's $1,000, you have it taxed, and so you get to keep $650 of it. You're going to put that $650 now over into your HSA account, and it will never get taxed again. And you use it for healthcare expenses specifically, but if you get to a certain amount in the HSA, and I can't remember the amount, it's 2,000, 2,500, or 5,000, somewhere in there between $2,000 and $5,000. You can actually invest that. You can go and do stuff with that money. Just the money has to come back into it. But you could buy real estate with it. You could buy Super Bowl tickets. You could do art. It just there's rules around it. You have to understand. So you don't want to get in trouble with it. But there are ways to invest that money, put it back in, and grow your health savings account just exponentially. It's something that's actually pretty incredible, which can help you when you are old enough where you're going to need assisted living, and you could pay somebody, 10, 20, $30,000 a month. Who knows what it's going to be like in 40 years. But you'd be able to do that because you've invested in your HSA account, and this is an expense that goes towards that. Real estate deferral strategies as well. So you could do things like a 1031 exchange where you can kind of avoid some of those capital gains taxes that are going to come if you sell something. So there's other ways to do that. There's so many different strategies out there from an investment, from a retirement standpoint, things that you should be looking at and getting familiar with as you're getting into this. These are things that you are probably not thinking about because you're just so confused. You're overwhelmed by, I need to figure out how to get funding, and I need to know how to, I need to know how to start. Like, I just don't even know how to build a foundation. So if that's you and you don't know where to go, you're probably not thinking about these things. But tax strategies and planning, it's going to benefit you just so much if you take the time to do that. Some other advanced strategies could be doing an S corp election. So you start out with an LLC, you transition that into an S corp. There are some advantages there to avoid some self-employment taxes, but there's kind of a matrix that you want to look at. KKOS, Mark Kohler at KKOS, he has incredible YouTube videos that kind of explain a lot of these tax strategies. So I encourage you to go watch him. He's great at doing it. Kind of fun guy to listen to talk. He used to do boxing and stuff. He's a fun guy. R&D tax credit. So if you create something that's kind of innovative, if you have an innovative process, you're putting it out there. There are tax credits that are out there for that as well, which is kind of cool. You develop a new process, you can put those things out there. You want to avoid common mistakes as well. So you have to keep detailed records. Keep all your receipts. You want to document everything. You need to make sure you have all that just in case you get audited. Misclassifying your employees as contractors can be a problem. That's why using something like Gusto is going to benefit you a lot, because you can assign them as W-2 or 1099, tracks everything, make sure they get the proper documents, their tracking time and everything. It helps out a ton. And then failing to plan for any tax payments. So if you have a large tax payment one year, that's just how it worked out, and you haven't planned to make those tax payments, that can really hinder your ability. It could eventually shut your business down, result in huge fines, possibly even jail time. So you want to make sure you're avoiding that. And so planning for those types of things can be beneficial for you as well. So there's a lot of advanced tax strategies that are out there. I'm not going to cover all of them because they are going to be specific to you and what you're trying to figure out in your situation. So there's a lot. Taxes can be dry. They can be hard, but they're such an important part of running a small business, and something that you really need to grasp as you are trying to move forward. Something that you need to understand as you're trying to move things along and move things forward. And if you need some help and some guidance on that, my accelerator program kind of goes through the process of how to launch an assisted living business from start to finish using my 5-phase process. In there, we also talk about some of those strategies about setting up entities, why you would do that, contacts and things like that for how you can really move forward and take advantage of this. So if you need some guidance on that, would love to help you out. Go check out the accelerator program at assistedlivinginvesting.net/ALA. Would love to have you there and kind of coach you and teach you more than just this little subsection of taxes, and help you launch your assisted living business here in the next 12 months to help you reach that time of financial freedom that you're looking for. So With that said, I want to remind you to like the video, subscribe, and ring the bell as well so you get notified every time we put out content. And you can ask questions. We're going to get into our Q&A stuff right here. But just want to remind you, make sure you do those things so you get when we go live on Tuesdays, when we are putting out our content on Thursdays, when we're posting things on Facebook, Instagram, LinkedIn, that you're getting all of those. And if you go and grab the free business plan checklist, you will get on our newsletter email as well. So if you miss anything, we will make sure we get it out to you. Blog, podcast, videos, we'll make sure we get that out to you in a nice little email at the beginning of the week so you can see what you missed last week. Would love to help you out with that. And with that said, let me shift over here and get into my mode of question asking. All right, so shifted this around a little bit from last week, hoping that we can pop things up in the right spot. So if there are any questions, go ahead and type those in. Would love to help you get some of your questions answered and help you move things along. I know there's quite a few of you in here. We're just not going to questions. So I'm going to go ahead and close that out. I want to just sit here and talk about nothing while you're doing that. But want to thank you all for watching. Thanks for being here. Make sure you go and grab the business plan checklist, assistedlivinginvesting.net/BP checklist. We'd love to help you out and give you some guidance there. Make sure you are taking the right steps as you're trying to launch your assisted living business and make some progress towards reaching your investment goals. And okay, my video was off. I was wondering if my thing shut down. But yeah, want to thank you all for watching. Thanks for being here. Does residential assisted living sound interesting to you, but you don't know how to get started? At Assisted Living Investing, I'm here to help beginners like you launch their assisted living business in the next 12 months. I love helping and coaching people just like you to help you reach your goals, and would love to be able to do that and help you along. And with that, remember, it doesn't take a lot, just a little bit. Just keep going step by step by step. And I promise you, if you do and you're consistent and persistent, you're going to be successful. Thanks for watching and have a great day.